Traders at Access Bank anticipate a mildly bearish tone in the bond market today as liquidity pressures are expected to surface following the recent bond auction settlement. In the T-bill space, strong demand continues for the June 23rd and June 30th, 2026 OMO maturities, trading around an average of yield of at 19.1%. Joining me now to discuss the latest market trends is Uzor Anakebe. He's the team lead for foreign currency balance sheet management at Access Bank. Thank you so much for your time today, Uzor. And just get a quick run through midweek today. Let's run through, what we've seen play out in the market so far and what's shaping sentiments for investors.
Thank you so much for having me. So, opening the week, we have continued to see significant improvements in market liquidity. Opening today, the market liquidity is about 4.1 trillion, and coming from yesterday's levels of about 3.8 trillion. So, 3.8 trillion. So, this is a significant improvement in market liquidity, and consequently, we've seen the OPR and overnight rate at SDF levels, which is at 24% handle. For the FX market, we've continued to see interesting play there. We've seen significant flows from the foreign portfolio investors, which continue to show that they still appreciate the Nigerian appetite for debt securities in Nigeria, and we've seen them bringing in dollars in the market. The market is currently trading at sub 450 naira to the dollar today, and there's indication that there will still be significant appreciation in that market, bearing any significant changes in market dynamics. On the fixed income market, we've seen the DMO coming on Monday to issue a bond auction where 260 billion naira was offered on both the 5-year and the 7-year maturity, 2030 and 2032 maturity. The bond was oversubscribed as expected due to we've continued to see significant liquidity in the market by about 1.2 trillion naira. For the stop rates, the 2030 closed at 15.83%, and the 2032, the 7-year maturity closed at 15.85% handle. And I can tell you that today, those bonds, the 2032, the 7 years already trading at 15.75 handle, as we continue to see appetite for debt instruments by both local and foreign investors for the Nigerian market.
Let's stay on that tangent real quick here and look at what's happening there, because I understand there's still some unmet bids from that auction there, and that's filtering into the secondary market. How is that reshaping the yield dynamics going forward?
Yeah, so we've continued to see significant appetite, and we know that there are auctions coming up in the coming week. We have NTB auction, and we expect that this will be overly subscribed, considering that the liquidity level in the market is over 4 trillion opening today. We've also noted that the bond market is trading, especially on the long end, as most people are willing to take in longer dated securities. So we see that this would affect the yields significantly as we continue to see the yield trading downwards due to this bearish momentum that we've seen in the market. And on the treasury bills market, we've continued to see investors' appetite both on the short end and on the long end, which is very interesting because the OMO maturities as at June 2026 is trading sub-19 levels, while the short term is trading much higher, 25% handles. And then for the NTB, we have it trading at 15.75% handle. So we've continued to see significant appetite in the fixed income space, and both by the local investors who are trying to lock in securities in anticipation of rate cuts coming into November MPC meeting. And while we also see some foreign investors also cherry picking on these instruments.
But on the FX side, what's shaping your outlook?
Yeah, so we know that the FMO is coming out today with a decision on the policy rate for the U.S., and there is general anticipation that there will be a rate cut in the U.S. by a minimum of 25 basis points. So we've seen that this is spurring portfolio investors to chase yield in emerging markets where we've seen Nigeria to be a stronghold for them, considering that the economic indications for Nigeria has improved significantly. The rating agencies have given a stable outlook for Nigeria, and there's anticipation that this rating would even improve further. We've seen the accretion to reserve continue to increase on 16-week consecutive basis to over 42 billion, dollars currently. So there is all good news for Nigeria currently, and based on the fact that the US is likely to cut rates, we've seen some of those flows from the developed market coming to the emerging market as they are looking for enhanced yield for their instruments. So we anticipate that this would continue to spur activity in the FX market. FX market will continue to trade around the 1450 naira to the dollar levels, closing this the year, and except if there are any significant market activities.
Quite interesting times for the markets here and for investors looking into Nigeria. But thank you so much for your time as well and your analysis. Uzor Anakebe, the team lead for foreign currency balance sheet management at Access Bank.